You open the envelope. It's from your insurance company, and the letter starts the way these letters always start. We regret to inform you that your claim has been denied. Your stomach drops. You had the policy. You paid the premiums every single month on time for years. You thought you were covered. So how is this happening right now? Here's the part that should bother you. Somewhere in that policy packet you got when you signed up, the one that's probably still sitting in a drawer, unopened past page 3, there's a sentence. One sentence. And that one sentence is the entire reason your claim just got rejected. This happens to people every single day across the country, not because they did anything wrong, and not because their insurance company is necessarily acting in bad faith. It happens because health insurance policies are built in layers, and most people only ever see the top layer, the marketing layer, the comprehensive coverage layer, the layer that makes you feel safe. But underneath that layer is another one, the exclusions, the limitations, the waiting periods, and that layer is where claims actually get decided. So today, we're going to do something most people never do. We're going to walk through exactly how to read your own policy the way an insurance company reads it. Not to scare you, not to make you cancel anything or switch to some other plan, just to help you understand the gap between what you think your policy says and what it actually says. Let's start with the biggest source of confusion, and it's a confusion between two words that sound almost identical but mean completely different things: exclusion and limitation. An exclusion means something is simply not covered, period. Full stop. It doesn't matter how the claim is filed, how it's coded, or who your doctor is. If a service falls under an exclusion, the policy treats it as if it doesn't exist. Common categories you'll see across many plans include certain cosmetic procedures, experimental treatments, and specific conditions that are explicitly carved out in the contract language. A limitation is different. A limitation means something is covered, but only up to a certain point, or only under certain conditions. Think of physical therapy visits capped at a certain number per year, or mental health sessions that are covered but require prior authorization after a certain threshold. The service exists in your coverage. It just has a ceiling, or a gate, or a condition attached to it. Here's why this distinction matters so much. If you assume something is a limitation, you think, okay, I just need to stay under the cap or get the right paperwork first. But if it's actually an exclusion, no amount of paperwork changes the outcome. The door was never open in the first place. And the language insurance companies use to describe these two things can look almost identical on the page. That's not necessarily intentional. It's often just how legal and regulatory language gets written, dense, formal, and repetitive across plans. But the effect on you, the policyholder, is the same either way. You read a paragraph, you feel reassured, and you move on, without realizing you just skimmed past the one sentence that determines whether a future claim gets paid or denied. So how do you actually find that sentence? You don't need a law degree. You need a system. And that system starts with your summary of benefits and coverage, sometimes called the SBC. Almost every plan in the US is required to provide this document, and it's designed to be shorter and more readable than the full policy. But here's the catch. The SBC gives you the headline. It does not give you the fine print. It's the trailer, not the movie. So you found your SBC, and the headline coverage looks great. Now what? Here's the move almost nobody makes. You take the specific service you're worried about, whether that's a planned surgery, a mental health benefit, or coverage for a chronic condition, and you go looking for that exact phrase inside the full policy document, sometimes called the evidence of coverage or the certificate of insurance. This document is longer, denser, and yes, less fun to read, but it's also the document that actually governs what gets paid. Inside that document, there are usually 3 sections worth your attention. First, the exclusion section, often just labeled "what's not covered." Second, definitions, because insurance companies define ordinary words in very specific, sometimes surprising ways. And third, any riders or amendments attached to your specific plan, because group plans through an employer can have add-on pages that change the base contract. Let's talk about waiting periods, because this is where a lot of "wait, I need to check my policy" moments happen. A waiting period means a service is technically part of your coverage, but it doesn't activate until a certain amount of time has passed since your enrollment date. This shows up most often with things like maternity benefits on certain plans, or coverage tied to pre-existing conditions on older policy types. If you switched jobs, switched plans, or had a gap in coverage recently, this is one of the first things worth checking, because the clock may have reset without you realizing it. Now here's a scenario to walk through together. Picture someone with a chronic back issue. They've been managing it for years with physical therapy. Their plan's marketing materials say physical therapy is covered. Full stop. Sounds great. But buried in the limitations section is a line that says physical therapy is covered up to a certain number of visits per calendar year, and after that, additional visits require a separate prior authorization, with specific medical necessity documentation from a provider. The coverage was real. The cap was real too. And if nobody told this person about the cap, or about the paperwork needed before visit number 1 of the new authorization period, they could hit a wall mid-treatment, not because the coverage disappeared, but because a condition attached to it was never triggered in time. This is the heart of the self-audit. It's not about assuming your insurance is bad. It's about identifying, in advance, the exact conditions that have to be met for a benefit to actually pay out, so you're not discovering those conditions in the middle of a medical situation, when stress is already high and timing matters. So here's a simple order to follow, on your own time, with your own documents. Start with your SBC and write down every service category you personally care about, based on your real health situation, not a generic list. Then open your full policy and search for each of those terms specifically. Note any caps, visit limits, dollar limits, or pre-authorization requirements attached to them. Separately, look for a list of named exclusions, and check whether anything on that list overlaps with your situation, even partially. Finally, look for any waiting period language tied to your enrollment date, especially if your coverage started or changed within the last 12 to 24 months. None of this guarantees a specific outcome for any specific claim, and this isn't meant as advice about what your particular plan will or won't pay. Every policy is different, and the only document that fully describes yours is the one sitting in your own file. But understanding the difference between an exclusion and a limitation, knowing where waiting periods hide, and walking through your own coverage before you need it, that's the kind of quiet preparation that turns a stressful surprise into something you already saw coming. The goal isn't fear, it's familiarity, and familiarity is something you can build this weekend, with a cup of coffee and that folder you've been meaning to open.